Good afternoon, friends. Welcome to the world of business law. I, Professor Kunal Shah, is over here to present the balanced portion towards business law. Yes, friends, we are into the marathon revision of business law, wherein till now we have completed a topic called as Indian Contract Act 1872. Friends, now in today's lecture, we are going to start a new chapter, that is Indian Partnership Act 1932. Yes, friends, let us begin our journey for a topic called as Indian Partnership Act 1932. Over here, whenever I'm using the word called as act, what do you mean by act? The word act stands for rules and regulations which are specific in nature. Act stands for rules and regulations which are specific in nature. In this chapter, yes, friends, in this chapter, we are going to discuss various rules and regulations only and only towards Indian partnerships. And all these rules and regulations towards partnership came into our country from a year called as 1932. All these rules and regulations towards partnership was made applicable from a year called as 1932. I hope so, friends. You don't have any doubt towards the word called as Indian. So the major point of discussion over here left out to be is the word called as partnership. Over here, friends, this entire act came into force on 1st October 1932. This is the exact date of applicability when this act was into force. So if anyone is going to ask you that when did the provisions of Partnership Act was made applicable in our country, then the answer to this question is 1st October 1932. Yes, friends. Yes, friends. This entire act is applicable to whole of India. It is applicable to whole of India. Friends, the weightage of this chapter in your CA foundation exams could be for around 12 to 14 marks. This is the past trends about which I'm talking right now. Till now, in CA Foundation, the chapter was carrying a weightage of 12 to 14 marks. So we hope so. The same trend continues even for your exams of November 2020, which is now scheduled on December 2020. Yes, the provisions of this act was previously given under chapter number 11 of Indian Contract Act 1872. So prior to the years of 1932, whatever were the rules and regulations towards partnership, prior to the years of 1932, whatever were the rules and regulations towards partnership, all those rules and regulations all those rules and regulations were exactly given inside Indian Contract Act 1872, to be more precise, under chapter number 11 of Indian Contract Act 1872. However, in the years of 1932, we just removed the rules and regulations of partnership from Indian Contract Act, and we got a new act called as Indian Partnership Act 1932. Over here, whenever the provisions of Partnership Act is silent, then in that case, the general principles of the law of contract should be made applicable. See, it just tries to say that Indian Contract Act is also applicable upon Partnership Act 1932. For example, if two or more persons wants to come together and form a partnership, then in that case, they can do a business in a form of partnership, provided the consent of their is been taken freely. None of the partner was admitted either through coercion or undue influence or fraud, etc. So the general principles of Contract Act shall always and always applicable upon Partnership Act 1932. Yes, friends, for a layman, what do you mean by partnership? For a layman, the word partnership stands for a form of doing a business. Yes, it is one of the form of doing business. In India, whenever a person wants to do business, in India, whenever a person wants to do business, then that person can do business either in a form of a sole proprietorship, or a person can do a business in a form of partnership, or a person can do a business in a form of a company. So, friends, these are the three most famous forms of doing business. So, these are the only three ways of doing business. I never said that. I never said that. I just said that these are the three most famous forms of doing business. There are many other ways by which you can do business. There are many other ways by which you can do business, but these are the three most famous forms of doing business. Over here, apart from these three forms, you can have a business in a form of HUF. You can have a business in a form of LLP. So, friends, there are many other ways of doing businesses. But these three are the most famous forms of doing business. So, for a layman, partnership is nothing but a form of doing business. So, over your friends, whenever I talk about partnership, then it is nothing but a business relationship. Yes, friends, partnership is nothing but a business relationship. When I say a word called as relationship, can I have a relationship with myself? No, never. I cannot have a relationship with myself. For every relationship, there has to be two or more persons. So, in a similar way, when I talk about partnership, so partnership is also a business relationship. Partnership is also a business relationship. And over here, whenever you talk about business relationship, then in that relationship, there has to be two or more partners. So, what is partnership? In a simple language, in a very simple language, partnership is nothing but a business relationship wherein it is a business relationship between two or more partners. Now, this entire business does not get functioned as per the desire of a partner. It does not get functioned as per the desire of a partner. The entire business has been functioning as per a document called as partnership deed. Yes, the entire business functions as per a document called as partnership deed. That is nothing but partnership agreement, which we used to call in our day-to-day life. So, once again, partnership is nothing but a business relationship wherein there are two or more partners, and this entire business is not functioned as per the desire of a partner, whereas the entire business is been functioning as per the partnership deed. Partnership deed is nothing but a partnership agreement. Whenever I say it is a partnership agreement, is this agreement made out of love and affection? No, it is an agreement made out of intention to create legal relation. So the agreement which has been made out of a legal intention, those agreements are enforceable by law, and the moment an agreement is enforceable by law, it is nothing but a contract. It is nothing but a contract. So whenever you are into a partnership, directly or indirectly, you are actually under a contract. For that reason, the general principles of contract act, the general principles of contract act shall be made applicable upon partnership act as well. Over here, whenever you talk about definition of a partnership, the definition of the word partnership is given under section number 4 of Indian Partnership Act 1932. So henceforth, whenever you are going to talk about partnership, the very first thing which is going to run in your mind, the very first thing which is going to run in your mind is nothing but section number 4. So henceforth, whenever I'm going to shout out the words called as partnership, the first thing which is going to run in your mind is section number 4. Friends, the definition of partnership we have already studied in our childhood days. I mean to say, we have already studied in our 11th or 12th standards. Over here, the definition has been read as above. The definition says partnership is the relation between two or more persons who have agreed to share the profits of a business carried on by all or any of them acting for all. So this is the definition of the word called as partnership. I can easily give you a brief discussion about the definition of a partnership for at least around 1 hour. Easily, I can give a speech for the definition of the word partnership for more than 1 hour. But this being a marathon lecture, I do not need to go something which is in detail. We will just have the overview of the definition of the word called as partnership. So the definition says partnership is the relation between two or more persons who have agreed to share the profits of a business carried on by all or any of them acting for all. Through this definition, we come out with a conclusion that in order to form a partnership, we require following elements. I'm sorry, we require following elements. The very first element required to form a partnership is nothing but association of two or more persons. Yes, there has to be an association of two or more persons, wherein there has to be an agreement, there has to be some business activity, there has to be an agreement to share profit, and there has to be an element of agency. So these are the five basic elements required to form a partnership. Wait, my dear friends, wait. The name of the chapter is Indian Partnership Act 1932. Just like your Indian Contract Act 1872, I have divided this entire chapter into five parts. I have divided this entire chapter into five parts. In the very first part, I'm going to make you all understand what is partnership. The moment you understand what is partnership, then I will take you to the next level, which talks about types of partnership and types of partners. Then we will understand how to form a partnership. After that, how to perform a partnership. And at last, we will be discussing how to dissolve a partnership. So, yes, my dear friends, the entire chapter is divided into five parts, just like your Indian Contract Act 1872. Wherein the very first thing we are going to discuss is what is partnership. Later on, types of partnership along with types of partners. Then, how to form a partnership, how to perform a partnership, and how to dissolve a partnership. Now, the very first question, what is partnership? In that case, we are going to understand the definition of a partnership, which is given under section number 4. Through that definition, we have come across that there are five elements required for a partnership. There are five essentialities required for a partnership. See, when I say contract, to form a contract, you require an offer which will be accepted. There is a promise associated with consideration, forms an agreement. If that agreement is enforceable by law, it is a contract. So there were six essentialities to form a contract. But in order to form a partnership, you require association of two or more persons. There has to be an agreement. There has to be some business activity. There has to be an agreement to share profits. And the most important one, there has to be an element of agency. Let us discuss the entire definition of partnership in detail. Let us discuss the entire definition of partnership in detail. See, friends, over here, I have given you the entire definition of partnership. Just have a reading. The reading says that partnership is a relationship. Partnership is a relationship between two or more persons. Wherein there is an agreement to share profits from a business carried on by all or any of them acting for all. This is the entire definition of the word called as partnership. This is the entire definition. Now let us discuss each and every point in detail. The very first point, partnership is a relationship. When I talk about relationship, so can I say I'm talking about business relationship? So partnership is nothing but a business relationship. Partnership is nothing but a business relationship. Business relationship is a relationship. Business relationship is a relationship. For every relationship, there has to be minimum two or more persons. So, in a similar way, even in case of partnership, the law tries to say that there has to be minimum two partners. There has to be minimum two partners. There has to be minimum two partners. But there has to be maximum how many partners? The law is silent about that. Law is silent about that. Law says there has to be two or more. More signifies maximum number of partners. Maximum number of partners is not defined under Partnership Act 1932. Partnership Act 1932 just tells about the minimum number of persons required. The minimum number of persons required is two. Maximum, not defined. But it is Companies Act 2013 which says that in a partnership there can be maximum 50 partners. So the limit of 50 partners is actually not defined under Indian Partnership Act 1932. It is actually defined under Companies Act 2013. So partnership is a relationship. I'm sorry, it's a business relationship. Once again, partnership is a relationship. No, 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 no. It's a business relationship wherein there has to be minimum two persons or more persons. There can be minimum two persons or there can be even more than two persons. Over here, whenever I talk about persons, then persons includes two things. Persons includes number one, natural persons. Persons includes number one, natural persons, and persons also includes number two, artificial person. I guess there's some problem. 1 second. Persons includes natural persons and persons also includes artificial persons. If anyone is going to ask you that who can become a partner, then the answer is any person can become a partner. Who can become a partner? Any person. In order to become a partner, you need to be a person. You need to be a person. Person includes natural person as well as artificial person. Person includes natural person as well as artificial person. See, we all are nothing but the examples of natural persons, whereas company is an example of an artificial person. So, sir, can there be a partnership between two artificial persons? Yes. Sir, can there be a partnership between two natural persons? Yes. Sir, can there be a partnership between one natural person and another artificial person? Yes. Because whenever you want to become a partner, then in that case, you need to be a person. Any person, I repeat, friends, any person can become a partner, irrespective whether that person is a natural person or that person is an artificial person. Any person can become a partner. So, sir, can there be a partnership between two firms? No. Firm is not considered to be a partner. Firm is not considered to be a person, first of all. See, whenever I talk about partnership firms, they never enjoy separate legal entity. They never enjoy separate legal entity. So partnership firms never ever is been included inside the definition of person. When partnership firm is not a person, they are not eligible to become a partner. So there cannot be partnership between two firms. But wait, partner of one firm and partners of another firm can come together and form a partnership and can form a partnership. So over here, partnership is a relationship. Nah. It's a business relationship wherein there are minimum two persons, maximum more persons. Persons includes natural person as well as an artificial person. Over here, it is important to have an agreement. Yes, Partnership is not created by status. I repeat, my friends, partnership is not created by status, it is created by an agreement. If I am a partner in a firm, that does not mean that my child can also become a partner of that firm. Through status, he never enjoys a partnership. But if the partnership is entering an agreement with my child, then yes, there can be a partnership between my firm and the child. So partnership is not getting created by status, it is getting formed with the help of an agreement. Such agreements can either be by words spoken or it can either be by words written, which means agreement can either be in an oral form or it can also be in a written form. However, in order to avoid future disputes, it is better to have a partnership agreement in a written form. I repeat, agreement can either be in an oral form, it can also be in a written form. But in order to avoid disputes in future, it is better to have an agreement in a written form. Over here, this agreement will talk about various rules and regulations to run the partnership. It will talk about various rules and regulations to run a partnership. But one thing is for sure, the agreement will also talk about something towards sharing of profits. Yes, friends, sharing of profits is a prima facie evidence. Sharing of profits is a prima facie evidence. This is one of the primary requirement about partnership. That is, there has to be a sharing of profits. So sharing of profit is a prima facie evidence that there is a partnership. But that's not a conclusive evidence. Huh? That is just a prima facie evidence. Sir, whenever we are into partnership, can we assume that there will be sharing of profits? Yes. Partnership implies sharing of profits. Whenever I say that these are the three persons who are into partnership, then you can start implying that yes, these three persons will be sharing the profits of the firm. So partnership implies sharing of profits. I repeat, partnership implies sharing of profits. But wait, when few persons are sharing profits, that does not necessarily mean that you are into partnership. Mere sharing of profits, mere sharing of profits does not necessarily mean that you are into partnership. Let me give you an example. There is a partnership firm comprising of three partners. Now, that three partners are into a requirement of a loan. The firm is in need of a loan. I'm sorry. So these three partners is approaching a money lender in order to get a loan. Moneylender said, yes, I am ready to give you a loan, but in return, I will require a higher rate of interest, and the rate of interest will be 20% per annum. The partners were shocked that how can we give a rate of interest which is 20% per annum. So these three partners came together and they decided that let us take a loan from the moneylender. Let us take a loan from the moneylender. Whatever is the money which we are going to get from the moneylender, that money we will utilize in our business. Through that business, whatever is the profit we are going to get, out of that profit, let us give away 25% to that money lender. So if there is a profit, we will give 25% to the money lender. So over here, the partnership firm is going to share profit with the money lender. That does not mean that money lender is also a partner over there. No. Mere sharing of profits. Mere sharing of profits does not necessarily mean that you are into partnership. But yes, whenever you are into partnership, it is necessary that there is something called as sharing of profits. So one last time, partnership implies sharing of profits, but sharing of profits is not necessarily implying partnership. There are various ways, there are various activities wherein we are sharing profits, but that does not make us a partner. So sharing of profits does not necessarily implies partnerships. So sharing of profit is just a prima facie evidence. It is just a primary evidence. Over here, this profit we are going to derive is from a business. The profit we are going to derive is from a business. Business means any kind of trade, any kind of occupation, any kind of profession. So trade over here means any kind, sorry, business over here means, sorry, business over here means any kind of trade, any kind of occupation, any kind of profession. But this has to be lawful in nature. This has to be lawful in nature. So whenever I talk about business, then business means any kind of trade, any kind of occupation, any kind of profession which has to be lawful in nature. Now this business can be carried on by all the partners, or it can be done by any one of them but acting for all. Whatever is the business of the firm, that business could be carried on by all the partners, or the business can be carried out by any one of them but acting for all, which means every partner is the agent of the firm, which means there is something called as a mutual agency. There is something called as a mutual agency amongst the partners. And yes, friends, this is the true test of partnership. This is the true test of partnership. Rather, this is the conclusive evidence. This is the conclusive evidence that the persons are into partnership. So whenever you are coming across mutual agency between the persons, then yes, you can conclude that yes, there is a partnership between them. So mutual agency is the true test of partnership. Mutual agency is the true test of partnership. Through that mutual agency, one can conclude that yes, the persons are into partnership. The persons are into partnership. So friends, we have done a detailed discussion towards the definition of the word called as partnership. Over here, a person who receives the profits of a business is not necessarily a partner. I just said, that mere sharing of profits does not mean that you are into partnership. But the persons who receives the profit are not the partners, and they are as follows. A retired partner is receiving profits. That does not mean he's a partner. Moneylender is receiving a profit. That does not mean they're into partnership. So these are nothing but examples which we have already discussed in our video lectures. We've already discussed all of them in detail in our video lectures. So just make a rule. Just make a rule that a person is sharing profit is not necessarily a partner. But if a person is a partner, he will definitely get share in profits. The last point over here, the note. The note over here. I've already discussed this note with you right now. That is, mere sharing of profits is not necessarily a partner, but any person who is a partner is definitely to get something called as the share in the profits. So friends, with this, we have completed our entire portion towards what is partnership. Now let us go on towards the next part, which talks about types of partnership and which also talks about types of partners. I repeat, types of partnership and also types of partners. When I say types of partnership, then yes, friends, partnerships is been classified under two headings. That is number one, with regards to the duration, and number two, with regard to the extent of business. So whenever you talk about partnership, then partnership is being classified. Partnership is being classified under two things, with regards to the duration and with regards to the extent of business. When I talk about with regards to the duration, then in that case, partnership can be a partnership at will, or it can be a partnership for a fixed period. Let me first tell you what do you mean by partnership for a fixed period. Friends, partnership for a fixed period means it is a partnership which is there only for a limited period of time. The moment time expires, the moment time expires, even partnership comes to an end. For example, there are three persons who are coming together and forming a partnership, and they have agreed that they are going to be into partnership for next 5 years only. So friends, it is nothing but partnership for a fixed period. The moment 5 years expires, the moment 5 years expires, then in that case, their entire partnership also comes to an end. Their entire partnership also comes to an end. So any partnership which is for a fixed period of time, any partnership which is for a fixed period of time, then that partnership is called as a partnership for a fixed period. Sir, if there is a partnership wherein there is no fixed period, then it is a partnership called as partnership at will. So when I talk about partnership at will, it is a partnership wherein there is no fixed period for the partnership. It can be a partnership running for 5 days, 10 days, 20 days, 100 days, 1 year, 5 years, 10 years, 15 years, 20 years, 50 years. It can be of any range. There is no fixed period for the partnership. So whenever I talk about a partnership which is for a fixed period, it means it is a partnership which is there only for limited period of time. The moment time expires, the partnership comes to an end. When I said that there is a partnership only for 5 years, then the moment 5 years expires, the moment 5 years expires, partnership comes to an end. Partnership comes to an end. Now, even after 5 years, if the partners wants to continue their business, then the partnership for a fixed period gets converted into partnership at will. It gets converted into partnership at will. Over here, there was a partnership only for 5 years. 5 years have come to an end. But then also the partners are continuing their business. Then that partnership is now to be considered as partnership at will. Okay. What is partnership at will? It is a partnership wherein there is no fixed period for the partnership. There is no fixed determination for the partnership. Then in that case, it is a partnership at will. But wait, friends, whenever I talk about partnership at will, whenever I talk about partnership at will, to always and always remember that in case of partnership at will, if any one partner gives a notice of his retirement, if any one partner gives a notice of dissolution, rather, the entire firm gets dissolved. Entire firm gets dissolved. However, if the partnership did allows, then the other partners can continue the firm. Otherwise, the entire firm gets dissolved. So in case of partnership at will, one partner giving a notice for the dissolution of the firm, the entire firm gets dissolved. If the partnership did allows, then only the other partners can continue the firm, otherwise not. So that was a partnership with regard to the duration. Let us talk about partnership with regard to the extent of business. With extent to business, we have got a particular partnership and we have also got a general partnership. What is a particular partnership? Particular partnership is a partnership for a particular business activity. So any partnership which is for a particular purpose, then that partnership is called as a particular partnership. For example, three persons have come together and they have decided to do a business in a form of partnership, and they will be into a business. They would be into a business of construction of a building. Then their partnership is limited only towards construction of that building. Only towards construction of that building. So particular partnership is a partnership for a particular purpose. It is a partnership for a particular purpose. Then what do you mean by a general partnership? It is a partnership which is not for a particular purpose, wherein they can undertake any business activity they want to undertake. So any partnership which is for a particular purpose is called as a particular partnership. Any partnership which is not for a particular purpose is called as a general partnership. So friends, we have completed one more topic called as types of partnerships. Let us go on. Let us go on to the next part which talks about types of partners. Friends, the entire chapter was been divided into 5 parts. Roman number 1, what is partnership? We have completed. Roman number 2, types of partnership done. Now let us discuss types of partners. After that, we will understand how to form a partnership, then how to perform a partnership, and then how to dissolve a partnership. Yes, friends, let us discuss types of partners. We have got various types of partners. We have got an active partner, sleeping partner, nominal partner, partner only for profits, incoming partner, outgoing partner, sub partner, partner by holding out or estoppel, and minor as a partner. These are the various types of partners which we will be discussing in these lectures. The very first one, active partner, also called as an actual partner, also called as an ostensible partner. Either you say active partner, or you say actual partner, or you say ostensible partner. It's one and the same. It's one and the same. You say Kunal Shah or you say smart, the meaning remains the same. Just kidding. Okay. So in a similar way, whether you talk about an active partner or you talk about an ostensible partner, it's one and the same. First of all, what do you mean by an active partner? Law says active partner is a partner. Active partner is a partner who actively participates into the business of the firm. So any partner who actively participates into the business of the firm, then that partner is called as an active partner. Sir, will an active partner contribute towards the capital? Yes. Being a partner, when I say you are a partner, which means you are a part owner. Part owner, partner. So when I say you are a partner, then you are going to get a part ownership only when you are going to contribute towards the capital. So, sir, will an active partner contribute towards the capital? Yes, pretty obvious. He is going to contribute towards the capital. Sir, will he be liable to the third parties? Yes. Being a partner, they will be always and always have an unlimited liability. So, active partner is a partner who participates into the business of the firm. He is a partner who contributes towards the capital. He is also a partner who is liable to third parties. He is also a partner who is liable to third parties. Whenever this active partner wants to, whenever this active partner wants to leave the firm, then he needs to give a public notice. Sir, if an active partner fails to give a public notice, sir, active partner fails to give a public notice, then in that case, sir, he will be considered as a partner by holding out. Because in the eyes of public, he's still a partner. So, hey, active partner, whenever you want to retire, then yes, you need to give a public notice of your retirement. So, active partner is required to give a public notice. Yes or no? Yes, he is required to give a public notice. Otherwise, in the eyes of public, he is still considered as a partner and he will be held responsible as a partner by holding out. So let us have a quick recap. Active partner, also called as an actual partner, also called as an ostensible partner. He is a partner who actively participates into the business of the firm. In fact, he is a partner. In fact, he is a partner who contributes towards the capital of the firm. Yes, he is a partner who is also liable for the activities of the firm. Yes, whenever an active partner wants to retire, he needs to give a public notice. Let us go on to the next explanation, that is an explanation towards sleeping partner. Sleeping partner is also called as a dormant partner. So either you call it a sleeping partner or you call it as a dormant partner. It is one and the same. Okay, just tell me, will a sleeping partner actively participates into the business of the firm? No, pretty obvious no. It is only and only the active partner who actively participates into the business of the firm. Apart from him, there is no other partner who actively participates into the business of the firm. So sleeping partner is a partner who does not actively participate into the business of the firm. In fact, sir, will he contribute towards the capital? Yes. He's a partner na means he's required to contribute towards the capital. If he's going to enjoy a part ownership, then in order to enjoy that part ownership, he needs to contribute towards the capital. Sir, is he liable for the activities of the firm? Being a partner, he's got an unlimited liability. So, yes, he's liable for the activities of the firm. Sir, whenever a sleeping partner wants to go for retirement, sir, does he require to give a public notice? No. A sleeping partner will not require to give a public notice because in the eyes of public, no one knows him. He is not known to the outside world. So in that case, he is not liable. He is not asked to give a public notice for his retirement. See, active partner is required to give a public notice of his retirement, but sleeping partner is not required to give a public notice for his retirement because he is not known to the outside world. He is a sleeping partner. Let us go on to the next partner, that is a partner called as a nominal partner. What do you mean by a nominal partner? Friends, nominal partner is a partner who has lended his name to the firm. Practically, this is absurd in nature. This is not possible in nature. See, practically, no one is going to lend his name, lend his goodwill to the firm, yeah. No one is going to do it. But this is just a provision. So, for the namesake of the provision, we need to understand this concept. So, practically, this is not possible. Any person who is lending his name to the firm is called as a nominal partner. In fact, a nominal partner will never contribute towards the capital because he has given something which is far more expensive than the capital, is nothing but his own goodwill. He has given something far better than capital, that is his own goodwill to the firm. So nominal partner, first of all, does not take active participation into the business of the firm. He will not have any active participation into the business of the firm. He will also not contribute towards the capital of the firm because he has contributed something which is more expensive than the capital, that is nothing but his own goodwill. He's not going to receive any profits. He's not going to receive any profits from the firm. He's a nominal partner. He's just lending his name. But, 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 before lending his name, he could have asked for some kind of charges from the firm. That if you want to use my name, you give me XYZ amount and I'm ready to give you my name. But afterwards, he will never have any kind of sharing of profits in the firm. In fact, he does not manage the business of the firm, which I already told you that he does not actively participates into the business of the firm. But wait, whenever you talk about a nominal partner, he will be always and always liable to third parties. Huh? He will be liable to third parties because the third parties will be doing a business with the firm only and only because of the nominal partner. If tomorrow I say, that Mukesh Ambani has lended his name to my firm, so which means Mukesh Ambani is just a nominal partner to my firm. Which means, now onwards, any person who is going to do business with me, that person is going to do business only and only because Mukesh Ambani is the partner of my firm. Now, if at all I do any kind of bad activity with that outsider, then yes, Mukesh Ambani will be held responsible because even his own goodwill was at stake. So, nominal partner is liable to third parties. Whenever he wants to withdraw his name from the firm, he wants to retire, then yes, even in that case, he needs to give a public notice. So, whenever a nominal partner wants to retire from the firm, even he needs to give a public notice for the same. So, there's a slight difference between a nominal partner and a sleeping partner. A nominal partner is known to the outside world as a partner of the firm, but in reality, he does not have any share in the profits. Whereas a sleeping partner is not known to the outside world, but he is still going to share the profits of the firm. So first of all, nominal partner. Does he takes active participates into the business of the firm? No. Does he contribute towards the capital? No, because he has contributed something which is far more expensive than the capital, that is his own goodwill. Is he liable to the outsiders? Yes. So does he require to give a public notice for his retirement? Yes. So whenever a nominal partner wants to withdraw his name from the firm, he wants to retire from the firm, he needs to give a public notice for the same. If he does not give a public notice, then in the eyes of public, he is still a partner, which means his liabilities will be still in continuing in nature. Let us go on to the next concept now. The next concept talks about partners for profits only. A partner only for profits. When I say partner only for profits, so he's a person who is never ever going to share losses of the firm. He's never ever going to share the losses of the firm. So any person, any partner who is not going to contribute towards the losses, any partner who is not going to contribute towards the losses, then such partner is called as a partner only for profits. But friends, loss and liabilities are two different things. The partner is not going to contribute towards the losses, but he's still liable for the activities. He's still liable. Yes, he will be held liable. For example, there's a partnership firm going on between three partners. Now, now the firm was in a requirement of further capital. So one more partner got introduced inside the firm, and that new partner, that is partner number 4, was a partner only for profits. It was an internal agreement between the partners that whatever are the losses, that losses will be shared by 3 of them, but whatever are the profits, that will be shared by 4 of them. So that is an internal agreement between the partners, which means partner number 4 is a partner only for profits. Now, one fine day, this firm was into further requirement of capital. So this firm of 4 partners has approached a banker to get a loan. The banker has given a loan to the firm. Now, now the banker can recover this money from any one of the partners. Because in the eyes of law, these 4 partners are joint promisors who have jointly made a promise to repay back the loan to the banker. Banker is the promisee, and these 4 partners are the joint promisors. So even if you are a partner only for profits, you could be held liable. You could be held liable. Yeah, you will never ever share the losses of the firm, but yes, you could be held liable. So this is just an internal agreement between the partners. This is just an internal agreement between the partners. Hence, a partner in profit continues to be liable to the third parties for all the acts of the firm. So whenever you are a partner only for profits as well, you could be held liable for the activities of the firm. So that was a concept towards partner for profits only. The next concept over here talks about a sub partner. What do you mean by a sub partner? A partner is agreeing to share his profits with a third person. Whenever the partner of a firm is going to share his profit with an outsider, then that outsider is called as a sub partner. Rather, partner's partner is a sub partner. A sub partner never ever takes active participation into the business of the firm. He never ever contributes towards the capital of the firm. He is never liable for the activities of the firm. He is never ever asked to give a public notice for his retirement because, first of all, the sub partner is not a partner to the firm. Sub partner is not a partner to the firm. He is actually partner's partner. He's not connected with the firm. He is actually connected to the partner of the firm, but not connected to the firm. He is not representing the firm. He's representing the partner of a firm. So sub partner is not connected to the firm. Hence, he will be never ever held liable for the activities of the firm. So friends, this was a concept towards sub partner. Let us go on ahead towards the next concept, which talks about incoming partner. What is an incoming partner? Whenever there is admission of a partner, a new partner can be admitted into the firm only with the consent of all the partners, only with the consent of all existing partners. See, Consent of all existing partners. Then the partner who has been admitted is considered as an incoming partner. So incoming partner is a partner. Incoming partner is a partner who has been admitted as a partner into the existing firm with the consent of existing partners. Then what do you mean by an outgoing partner? Any partner who leaves the firm, any partner who leaves the firm is called as an outgoing partner. A partner can leave the firm. A partner can leave the firm through retirement or through something called as expulsion or through something called as insolvency or through something called as a death. So whenever a partner is going to leave the firm, then that partner is considered as an outgoing partner. A partner can leave the firm through a mode called as retirement or through a mode called as expulsion or through a mode called as insolvency or through a mode called as death. All these things we are going to deal and discuss. All these things we are going to deal and discuss in detail into the next part of the topics, that is reconstitution of the firm. So whenever a new partner is admitted, it is called as incoming of a partner. Whenever an old partner is going to leave the firm, then it is called as an outgoing partner. Let us go on to the next concept, that is section number 28. Section number 28 talks about partner by holding out or by estoppel. An important concept. Partner by holding out and partner by estoppel. When I say partner by holding out or when I say partner by estoppel, then he is actually not a partner. He is actually not a partner. In fact, he is representing himself to be a partner, or else he is allowing someone to represent him as a partner. First of all, partner by holding out or partner by estoppel is not a partner. He himself is representing to be a partner, or else he is allowing someone to represent him as a partner. Such representations are being done either by words spoken or by words written or by conduct, that is behavior. And on the fate of that representation, the outsider has given the credit to the firm. Then that person is considered as a partner by holding out or partner by estoppel. One fine day, there was a huge public gathering. Even I was a part of that gathering. Then in that gathering, Mukesh Ambani came upon the stage and he just made an announcement that I would like to welcome on stage Shri Kunal Shah. The moment my name was being called upon, I went to the stage. Mukesh Ambani kept his hands on my shoulder and he just represented to the public gathering that Mukesh Ambani and Kunal Shah are partners. I just gave a smile. We were actually not partners, but Mukesh Ambani is representing that we are partners, and I am allowing him to represent that things. Now on that faith, the people who were there part of that gathering started giving credit to our firms. They started giving credit to our firm because Kunal Shah was the partner of that firm. Now Kunal Shah will be considered as a partner by holding out or partner by estoppel. See, when this representation was being made that Kunal Shah is my partner, I did not stop Mukesh Ambani to represent this thing. I did not stop him. For that reason, the public who was sitting in front of our eyes started holding me out. They started holding me out as a partner. Hence, I'm a partner by holding out or I'm a partner by estoppel. That is section number 28. Last point for discussion. That is minor as a partner. After this, we'll have a break for 5 minutes. First of all, please tell me, can a minor become a partner? The answer to this question is no. Generally, a minor cannot become a partner. But if certain conditions are being fulfilled, then yes, a minor can become a partner. Generally, a minor cannot become a partner. But if certain conditions are being fulfilled, then yes, minor can become a partner. The conditions are given under section number 30 of Partnership Act 1932. The condition says that a minor can become a partner only with the consent of all the partners. A minor can become a partner only with the consent of all the partners, wherein he has been admitted only for the benefits. He's been admitted only for the benefits, and he's been admitted only for the time being he is a minor. Only when these three conditions are being fulfilled, then only a minor can become a partner, otherwise not. So, if a general question has been asked, can a minor become a partner? The answer is no. But if certain conditions are being fulfilled, then yes, a minor can become a partner. That is with the consent of all the partners. The minor is admitted only for the benefits, and he's been admitted only for the time being he's a minor. Now, once a minor is being a partner, then in that case, whenever that minor partner attains the age of majority, whenever the minor partner attains the age of majority, then from that day he needs to give a public notice. From that day he needs to give a public notice that whether he wants to continue the firm or whether he wants to discontinue the firm. Such public notice should be given within 6 months from the date of attaining majority or the day when he comes to know that he was a minor partner, whichever is later. For example, on 1st January 2016, I was admitted as a minor partner. On 1st January 2018, I attended the age of majority. And at that time, I knew that I was a minor partner. Then from 1st January 2018, within 6 months, I need to give a public notice. The last date to give a public notice is on 30th June 2018. I need to give a public notice whether I want to continue the firm or whether I want to discontinue the firm. If I give a public notice that I want to discontinue the firm, okay, accepted. Now, after giving the public notice, if the firm is going to attract new liabilities, I will not be held liable for that liabilities because I am not more a partner. I have given a public notice of discontinuance. But if I give a public notice that I want to continue the firm, then from that very next moment, I will be held liable for each and every activity done by the firm after giving the public notice. In fact, I will also be held liable right from the beginning. I was a minor partner. Whatever were the liabilities of that firm, right from being appointed as a minor partner, I will be held liable for that activities also. Sir, by chance, if you fail to give a public notice, then if I fail to give a public notice within 6 months, then law assumes that I want to continue the firm. Law assumes that I want to continue the firm. Let us have a detailed discussion. See, I got admitted into the firm on 1st January 2016. So can I say this is nothing but the date of admission? When I was admitted into the firm, at that time I was a minor. Now, on 1st January 2018, I have attained the age of majority. Now, from this date, within 6 months, I need to give a public notice. So, the last date of 6 months is 30th June 2018. By this period of time, I need to give a public notice. Now, if I give a public notice that I want to discontinue the firm, which means now whatever are the activities done by the firm, for that activities I should not be held liable. For example, I gave a public notice on 1st March 2018. That was pretty well within the time limit of 6 months. The moment I give a notice on 1st March that I want to discontinue the firm, now if the firm has taken a loan on 2nd March, then for this loan I should not be held liable because I have already given a notice of discontinuing the firm. Okay, I give a public notice that I want to continue the firm. The public notice was given on 1st March. Now on 2nd March, the firm has taken a loan. Then for that loan, I will be held liable. In fact, I will be held liable for all the activities, right from the beginning. I was been admitted as a minor partner. For example, the firm had taken a loan in a year called as 2017, and this loan is still not paid off. Then yes, if I give a notice that I want to continue the firm, then I could also be held liable for this loan which was taken in 2017. So if the loan was taken in 2014, then for that loan I am not liable, because law says I will be liable only for those activities right from the beginning I was been admitted for the benefits of the firm. Sir, if at all you don't give a public notice, then in that case it is presumed that I want to continue the firm. So whenever there is a minor partner, whenever that minor partner attains the age of majority, he needs to give a public notice within 6 months whether he wants to continue the firm or whether he wants to discontinue the firm. So yes, friends, we have completed a topic called as types of partners as well. Quick recap, quick recap. The entire chapter was divided into 5 parts. What is partnership? Types of partnerships and types of partners, how to form a partnership, how to perform a partnership, how to dissolve a partnership. Out of these 5 topics, we have successfully completed 2 of them, that is what is partnership and types of partnership along with types of partners. Now friends, let us go for a break, and after the break we will continue our topic towards Indian Partnership Act 1932. Break for 5 minutes. Thank you. Yes, friends, welcome back to the world of business law. Before the break, we had completed a topic called as types of partnership and types of partners. Now, friends, let us go on to the next topic, which talks about how to form a partnership. Friends, whenever I'm talking about how to form a partnership, I'm actually talking about registration of a partnership. Friends, I repeat, whenever I'm talking about how to form a partnership, I'm actually talking about registration of a partnership. Over here, partnership is not getting created by status. Partnership is actually getting created by an agreement. You can make a rule. No agreement, no partnership. No agreement, no partnership. So, friends, partnership is nothing but created with the help of an agreement. Such agreements can be formed either by words spoken or by words written. But in order to avoid future disputes, it's better to have an agreement in a written form. But wait, friends, there is no particular formalities given by law for making of a partnership agreement. There is no particular formality given by law. So this partnership agreement can be under any form. There is no particular formalities given by the act. But but whenever you are making an agreement, make it sure that it has to be in a written form so that it avoids future disputes. Now, that agreement, which is talking about terms and conditions to run the firm, is nothing but called as a partnership deed. It is nothing but a partnership deed. Such partnership deed should be properly been stamped as per Stamp Act 1899. It should be properly stamped. Over here, if it is a partnership which is dealing towards immovable property, then that partnership should be properly stamped and it should also be properly registered. It should be properly stamped and it should also be properly registered as per the Registration Act. So, yes, friends, partnership. When I talk about how to form a partnership, I'm actually talking about registration of partnership. Over here, is partnership getting created by an status? No. Partnership is getting created with the help of an agreement. There is no particular formalities for preparation of this agreement. Partnership agreement can either be by words spoken or else it can also be by words written. However, in order to avoid future disputes, it's better to have a partnership agreement in a written form. It should be properly been stamped, and yes, if it is a partnership dealing towards immovable property, then it should be even properly registered as per Registration Act. Over here, sir, what are the contents of the partnership deed? What are the informations we have to provide inside the partnership deed? See, following is the information which is generally there inside a partnership deed. Partnership deed has an information towards the name of the partnership firm, name of the partners, nature and place of the business of the firm, date of commencement of partnership, duration of the partnership if it is a partnership for a fixed period. So these all are nothing but general information which is there inside the partnership deed. What are the general information? Name of the firm, name of the partners, nature and place of business of the firm. What is the business you are going to undertake? What is the place of undertaking that business? Okay, when did the partnership got commenced? However, if it is a partnership for a particular period, then for what period the partnership is going to continue? It also talks about the capital contribution by each partner. What is the capital contributed by each of the partner? What will be the profit sharing ratio of every partner? When can a new partner be admitted? When can a partner get retired? What will be the rate of interest on capitals? What will be the rate of interest on advances on drawings, etc.? What will be the provisions towards settlement of accounts in case of dissolution of the firm? What will be the provisions towards salaries and commissions payable to a partners? However, if a partner has to be required to be expelled, then what are the provisions towards expulsion of a partner? So all such things are nothing but a general information which is there inside the partnership deed. However, it is depending from firm to firm. They can add some more general information, or they can delete some general information from this entire list. So this is nothing but the contents of partnership deed. Over here, once we have got a partnership deed, then we have to register our firm. However, law says registration of a partnership firm is not compulsory, which means registration of a partnership firm is completely optional and not mandatory. If you want to register your partnership firm, then it's good. Get the partnership firm registered. If you don't want your partnership firm to be registered, then okay, don't register the firm. The Partnership Act 1932 has clearly given a statement that registration of a partnership firm is completely optional. It is completely optional. You want to get your firm registered? You can get your firm registered. If you don't want your firm to be registered, okay, no issues. It is completely fine. Even your firm is an unregistered firm. Yes, the process of registration can be done anytime. Not necessary that when the partnership begin, at that time only the process of registration should be done. No, 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 no. The process of registration can be done anytime whenever you want your firm to be registered. If your firm is registered, then in the eyes of law, it is a registered firm. If the firm is not registered, then in the eyes of law, it is an unregistered firm. It is an unregistered firm. Over here, whenever you want to get your firm registered, whenever you want to get your firm registered, then in that case, there is a procedure for registration of the firm. The entire procedure is given under section number 58 of Partnership Act 1932. The entire procedure for registration of the firm is given under section number 58 of Partnership Act 1932. Over here, the procedure is given under 5 steps, wherein the very first step says that you need to collect the form from the registrar's office. See, whenever you want to get your firm registered, yes, friends, whenever you want to get your firm registered, then in that case, you need to approach an authority called as Registrar of Firms, shortly referred as ROF, shortly referred as ROF, that is Registrar of Firms. So you need to approach to the office of a registrar and you need to collect a form which is required for registration of the firm. Once you have collected the form, then under step number 2, you have to fill up the form. While filling up the form, you need to give details towards the name of the firm, principal place of the firm, name of other places where the business has been carried out, that is branch offices, date when each partner joined, name and address of each partner, and by chance, if it is a partnership for a particular period, then for what period the partnership is going to get continued. So these are the informations which you have to provide inside that form. So step 1, collect the form. Step 2, fill up the form. Once the form has been filled up, then under step number 3, we need to get the form signed by every partner. The forms can be signed by partners or it can also be signed by the agents of the partners. So either the signing will be done by the partners themselves or it can also be signed by the agents of the partners. Once it has been duly signed, then under step number 4, we need to submit this form back to the registrar. Once the form is been submitted to the registrar's office, registrar will check the form, investigate the form, and if everything deems fit, then registrar will issue us a certificate of registration of the firm. And yes friends, that certificate itself is a conclusive evidence that the partnership firm is a registered firm. So, henceforth, whenever any person is going to tell you that is your partnership firm registered, you can say yes. But later on, if that outsider says what's the proof, then you can just showcase them the certificate of registration. That certificate of registration is nothing but a conclusive evidence that the firm is a registered firm. That the firm is a registered firm. So the entire procedure for registration of a firm is given under section number 58 of Partnership Act 1932. Step 1, collect the form. Step 2, fill up the form. Step 3, sign the form. Step 4, submit the form. Once you have completed step number 4, yes, your partnership gets registered, and as a matter of proof, under step number 5, the registrar will issue you a certificate of registration. And yes, friends, that certificate of registration itself is a conclusive evidence that your partnership firm is a registered firm. Are you all sure? Friends, this is the most simplest procedure for registration. You all have already studied the procedure for incorporation of a company. The procedure of incorporation of a company is far more lengthy, far more tough as compared to the procedure for registration of a firm. Such an easy procedure, na? Just under 4 steps, the firm gets registered, and under step number 5, we obtain a certificate of registration. And this process is one of the simplest process for registration of a business organization. Okay. So, if your firm is registered, then in the eyes of law, it is considered as a registered firm. However, if your firm is not registered, then it is considered as an unregistered firm. Being an unregistered firm, then your firm will be having certain consequences. Those consequences are given under section number 69 of Partnership Act 1932. Yes, friends. Section number 69 of Partnership Act 1932 deals with consequences of non-registration of a firm. I repeat, section number 69 deals with consequences of non-registration of a partnership firm. Law says that whenever a partnership firm is an unregistered firm, then the partners of an unregistered firm cannot file a case against the firm, or they cannot even file a case against other partners of the firm. So if you are a partner of an unregistered firm, sorry to say, you cannot file a case against your firm, and you cannot also file a case against any partner of the firm, because the firm itself is an unregistered firm and you are a partner of an unregistered firm. One fine day, I was admitted to one of the partnership firm, and as per the partnership deed, I was promised a profit sharing ratio which is equal in nature. So every partner is going to get a profit which is equal in nature. Now, the firm was an unregistered firm. Now, one fine day, our firm got a profits of rupees 100 crore. As against my share, I need to get at least 25 crores as a profit. But I just received a profit of 2 crores. I just received a profit of 2 crores. Now, being a partner of an unregistered firm, can I file a case against the firm? No. Can I file a case against the partners of unregistered firm? No. Because this is one of the consequences of non-registration. The second consequence over here The second consequence over here tells that an unregistered firm cannot file a case against third parties. Yes, unregistered firm cannot file a case against third parties. But wait, third parties can easily file a case against the unregistered firm. So unregistered firm cannot file a case against outsiders, but outsiders can file a case against unregistered firm. One fine day, our unregistered firm entered into a contract with an outsider. Now that outsider did a breach of contract. That outsider did a breach of contract. Now, being an unregistered firm, can we file a case against the outsider? Law says no. You cannot file a case against outsider because you are an unregistered firm. But if it was a vice versa situation, which says that if the unregistered firm had done a breach of contract, then law says yes. Outsider has a right to file a case against the unregistered firm. So this is a very, very big consequence which has been faced by an unregistered firm. The consequence says that the unregistered firm cannot file a case against outsiders. But outsiders can file a case against the unregistered firm. The last consequence over here. The last consequence over here says unregistered firm cannot claim a set off exceeding 100 rupees. What is a set off? Settlement. You cannot have a settlement of more than rupees 100. This is the maximum amount for which you can have a settlement, that is of rupees 100 only. One fine day, our partnership firm was having a right to recover 10 crore rupees from an outsider. We were having a right to recover 10 crore rupees from an outsider. But at the same time, we were also liable to pay that same outsider a sum of rupees 8 crores. So we are having a right of recovery of 10 crores and we are having an obligation to pay 8 crores. What will you say? What will you say? Sir, you are having a right to recover 10 crores, but you are having an obligation to pay 8 crores. Then have a set off of 8 crores and just recover 2 crores. Losses? No, no. You cannot have a set off of 8 crores. You can have a set off of maximum 100 rupees, not exceeding 100 rupees. So this is again a consequence which has been faced by an unregistered firm. First of all, registration of a partnership firm is completely optional. If you want to register your firm, it's okay. If you don't want to register your firm, it's still okay. But if your firm is an unregistered firm, then beware. Beware of certain consequences which will be faced by an unregistered firm. And all those consequences are given under section number 69 of Partnership Act 1932. That is, the partners of an unregistered firm cannot file a case against the firm. They cannot even file a case against other partners of the firm. The unregistered firm cannot file a case against outsiders. However, outsiders can still file a case against an unregistered firm. The unregistered firm can have a set off of not exceeding rupees 100. But these are the three consequences, friends. These are the three consequences which are being faced by an unregistered firm. These are the three consequences which are being faced by an unregistered firm. But now law says that following rights are not affected. Following rights are not affected by non-registration. So these are the rights which are not going to get affected. These are the rights which are not going to get affected because of non-registration. The very first right which is not going to get affected, wherein the law says the third party can file a case against the firm, but the unregistered firm cannot file a case against third party. So third party is having a right to file a case against the unregistered firm. Okay. The partner of an unregistered firm generally cannot file a case against the firm or cannot file a case against any other partner of the firm. But if it is a matter towards dissolution, or it is a matter towards the accounts to be settled at the time of dissolution, or there is a matter towards realization of property at the time of dissolution, then such matters can be taken to the court, wherein the partners of an unregistered firm can still file a case for the same. Over here, if there is any kind of a personal contracts, then yes, the partners of an unregistered firm can file a case against other partners of that firm, provided there was a personal contract between them. So for personal contracts, you can file a case, but not for business contracts. Yes, the last right which is not going to get affected is saying that the official assignee or the receiver of the court can sell the property of an insolvent partner of an unregistered firm and file a case for the same. So, if I'm a partner of an unregistered firm and later on I become insolvent, then in that case, the court will appoint an official assignee or a receiver on my behalf. That official assignee or that official receiver can sell the property of me as an insolvent partner, and if they want, they can also file a case for the same. So, these are the rights which are not going to get affected if the firm is unregistered. So you can say these are the exceptional cases for non-registration of a firm, wherein there are no consequences or there are no rights getting affected. So friends, with this we have completed our Roman number 3, which talked about how to form a partnership, which was registration of partnership. Let us go on to Roman number 4. Let us go on to Roman number 4, which talks about how to perform a partnership. Friends, under Roman number 4, when I talk about performance of a partnership, then under Roman number 4, I will be discussing three topics. Number 1, rights and duties of partners. Number 2, authority of a partner. And number 3, reconstitution of the firm. These are the three topics which I will be discussing under Roman number 4, how to perform a partnership. So Roman number 4 deals with three different concepts: rights and duties of partners, authority of a partner, and reconstitution of the firm. Let us first discuss the very first topic, which talks about nothing but rights and duties of a partner. Rights of a partner. The very first right of a partner is to right to take participate into the business activity. Yes, it is the right of a partner to have participation into the business activity of the firm. But wait, friends, this right is not given to every partner. This right is not given to every partner. It is a right given only and only as per the partnership agreement. Basically, this is a right given to an active partner. It is a right given to an active partner. So, right number 1, right to take active participation into the business of the firm. The second right over here is right to be consulted. See, boss, I'm a partner. Whenever you are going to do any kind of business decisions, whenever a business decision is been going to be taken place, then for those business decisions, you have to first consult me. I'm a partner now, so you require to have my consultation. So right to be consulted. Yes, being a partner, I'm having a right to have access to the books of accounts. So, can a partner have an access to the books of accounts? Yes, being a partner, he can have an access to the books of accounts. Yes, being a partner, I'm also having a right to have share in profits. I'm also having a right to have share in profits. In fact, this is the right wherein no one can stop a partner to have a right of sharing of profits. Even a partnership deed cannot restrict a partner from getting a share of profits. So right to share a profit is a right available to every partner. Whenever you are into partnership, it is implied that there will be sharing of profits. Huh. But sharing of profits does not necessarily imply that you are a partner. Huh? Partnership implies sharing of profits. Okay. The next right is right to have interest on capital and on advances. So if you are a partner and you have given if you have given some capital to the firm, then upon that capital, you are having a right to demand interest, but you can demand an interest on capital only and only when partnership deed allows. If the partnership deed allows, then only you can have interest on capital, otherwise not. But wait. Partnership deed is allowing to have interest on capital, but the firm should also have profits. Then only the firm can give interest on capital. So interest on capital is possible only when number 1, partnership deed allows. Number 2, the firm is having a profit. Sir, along with capital, the partner has also given some kind of advances to the firm. So, for that advances, can a partner demand interest upon that advances? Loss is okay. If a partner has given some amount as an advance to the firm, then upon that advances, the partner can have an interest. But again, that is possible only when partnership deed allows. But, but if the partnership deed allows, then a partner can 100% have interest on advances. I am saying 100% he can have interest on advances, but the rate of interest will be not exceeding 6%. 100% means yes, he's having a right to have interest on advances, but the interest will not be more than 6%, irrespective whether the firm is having a profit or not. So see, there are two parts. Interest on capital allowed only when partnership deed allows and the firm is having a profit. Whereas interest on advances is allowed when partnership deed allows, irrespective whether the firm is having a profit or not. Okay. The next right is right to indemnity. What do you mean by indemnity? Indemnity stands for protection. It is a right of every partner. It is a right of every partner to get protected. So when another partner has done a fraudulent activity, then it is the duty of that partner to protect other partners. So duty of one partner is making right of other partners. There are four partners. Partner number D had done a fraud. Because of his fraud, other three partners are getting responsible. Other three partners are asked to contribute towards that losses. So now it is a duty of partner number D to indemnify these three partners, that is to protect these three partners. So when it is a duty of partner number D to protect, it is the right of three partners to get protected, that is right to indemnity. Yes, the partnership property can be utilized exclusively for firm's business. So right to use partnership property for firm's business. Right to be consulted at the time of admission of a new partner. Whenever a new partner is going to get admitted into the firm, whenever a new partner is going to get admitted into the firm, then in that case, it is a right of a partner to be consulted. Yes, friends. Yes. At the time of admission of a partner, at the time of admission of a partner, I repeat, at the time of admission of a new partner, you require consent of all the partners. You require consent of all the partners. So only when the partners, that is all the partners have given their consent, then only a new partner can be admitted. So right to be consulted at the time of admission of a new partner. Yes, it is the right of a partner to retire from the firm. Yes, a partner can easily retire from the firm if he wants to retire. He became a partner as per his own will. If he wants to retire, he can also retire from the firm. However, we would be having a detailed discussion towards retirement when we study reconstitution of the firm. Yes, it is the right of a partner not to be expelled, not to be expelled. Very important. It is a right of a partner not to be expelled. I repeat, it is right of a partner not to be expelled. You cannot expel a partner. Expulsion is allowed only when the partnership deed allows. I repeat, expulsion is allowed only when partnership deed allows. If partnership deed does not allow, sorry to say, you cannot expel a partner. So when can you expel a partner? Only when partnership deed allows, provided the partner who is getting expelled with the consent of majority of the partners. He's getting expelled under good faith. And before expulsion, he has been got something called as an opportunity of being heard. Only when all these provisions are being fulfilled, then only you can expel a partner, otherwise not. Otherwise not. It is the right of a partner not to be expelled. It is the right of a partner not to be expelled. So when can you expel a partner? Number one, only when partnership deed allows. Provided the partner is getting expelled with the consent of majority of the partners, is getting expelled under good faith, which means the partner has been expelled for the benefits of the firm and not for the benefits of the partners. And the partner who is getting expelled has been got something called as an opportunity of being heard. Next, right to have remuneration. Right to remuneration is again depending upon partnership deed. If the partnership deed allows, then only a partner will be having a right to have remuneration, otherwise not. Otherwise not. But if the partnership deed is allowing, that yes, the partners can have remuneration, the partners can have salaries, that does not mean that if a partner is going to take salary, that partner will be considered as an employee of the firm. No. Taking salaries does not make a partner an employee of the firm. He can take salaries only when partnership deed allows, otherwise not. Last point, being a partner, he has got a right to dissolve the firm. Yes, he can easily get the firm dissolved, which is the point we are going to cover under the last topic called as dissolution of partnership. So friends, this were nothing but rights of a partners. This was nothing but rights of a partners. Let us go on to the next part, which talks about duties of a partner. Being a partner, the very first duty you have got is duty to act under good faith. Each and every partner should always and always have a duty to work for the benefits of the firm and not to work for their own personal benefits. So, duty of good faith, which also says about uberime fedai, that is utmost good faith. Uberime fedai, utmost good faith. Yes, the business of the firm should be carried on for the advantage of the firm and not for your own personal advantage. So each and every partner will be working for the prosperity of the firm and not for his own prosperity. Yes, it is a duty of the partner to always and always render true accounts, which means there has to be complete transparency of accounts. You should not make any kind of secret profits from the accounts of partnership. So there is a duty to render true accounts. Yes, it is a duty of a partner to give full information about whatever knowledge he has about the business. All those information he should share with other partners. So it is the duty of a partner. It is the duty of a partner to give full information. Whatever knowledge he has, whatever information he has, all such information he should share with other partners. That's the duty of a partner. It is a duty to indemnify for loss caused by fraud. So if a partner has done a fraud, then it is the duty of that partner to protect other partners from that losses. I already gave you an example. Four partners, partner number D did a fraudulent activity, then it is a duty of partner D to protect other three partners from the loss. Indemnify stands for compensate, that is protect. It is a duty of a partner to work diligently, means to work carefully with utmost care. You should not showcase any kind of negligence over here. So, hey partner, whenever you are undertaking a business activity, that business activity should be undertaken diligently, that is with utmost care. Yes, it is a duty of a partner to share losses. It is a duty of a partner to share losses. So, whenever there is a partnership firm, and in that partnership firm, if there is any kind of loss, then yes, it is a duty of the partners to share losses. But wait, if there is a partner only for profits, then that partner won't share the losses, but other partners will be having a duty to share losses. But if there is no such partner only for profits, then it is a duty of every partner to contribute towards the losses as well. The next duty over here is to duty to account for personal profits. Duty to account for personal profits. Yes, it is a duty of every partner to account for personal profits. Whenever a partner has made a personal profits, the partner has made a personal profits by using the name of the firm or by using some connections of the firm, then it is a duty of that partner to give away that entire personal profits back to the firm. So it is a duty of a partner to account for personal profits. Yes, it is also the duty of a partner to use the firm's property exclusively for the business of the firm, which means partnership property should not be utilized for personal use. It should be used exclusively for the business of the firm. And last duty talks about duty to act within an authority. Yes, it is a duty of a partner to always and always act within the authority which is given to that partner. So, with this, friends, we have completed our topic number one, that is rights and duties of partner. Let us go on towards topic number two, which talks about authority of a partner. Yes, friends, can I say every partner is nothing but the agent of the firms? Each and every partners are nothing but the agents of the firm. Being an agent, they have got certain authorities, and yes, it is their duty to always and always act within that authority. So every partner is nothing but the agent of the firm. And being a partner, it is your duty to always and always act within the authority given to you. Let me give you a very simple example over here. Can I say, friends, right now I am acting as an agent for JK Shah sir? Any person Working on behalf of another person is called as an agent. I am working on behalf of JK Shah sir. So it means I am the agent of JK Shah sir. So being an agent, JK Shah sir would have given me certain authorities. JK Shah sir has given me an authority to take lectures for law at various level of CA exams, that is right from foundation till final CA. So it is the authority given to me by my principal. So JK Shah sir is my principal, I am his agent. So being an agent, it is my duty to always and always work within that authority. In a similar way, partners are the agent of the firm. The firm is the principal, partners are the agent. Whatever is the authority given by the firm to the partners have to be working within that authority only. JK Shah sir gave me an authority to take lectures for law. I am taking lectures for law only, which means I am doing my work as per the authority given. I gave my 100%. I was working with utmost care. Then also, the students did not do well in the exams of law. It is not my fault then. It is not my fault. It is JK Shah sir's fault who will be having the loss towards it. So if a agent is working within his authority, and if there is a loss, then such loss shall be borne by the principal and not by the agent. So in a similar way, if a partner is working within his authority, and if there is a loss, then such loss will be borne by the firm and not by the partner. Second situation, I am an agent for my principal JK Shah sir. JK Shah sir has given me an authority to take lectures for law. But one fine day, I just thought that let me take lectures for accounts. Can I say I'm going against my authority? Can I say I'm doing an unauthorized activity? Whenever a partner has done an unauthorized activity, whenever an agent has done an unauthorized activity, but later on, it was been ratified by the principal. I said to JK Shah sir, you gave me an authority to take lectures for law, but in a particular batch, I have started with a subject called as accounts. I hope so you don't like it or you like it. I hope so you like it. JK Shah said, okay, in that batch you do with your accounts, but please henceforth don't do any other things than law, what has been assigned to you. I said, okay. So for that particular batch, I am now authorized to take subject called as accounts. Now in that batch, entire batch got failed for accounts. Then in that case also, whatever is the loss, that loss will be won by JK Shah sir and not by me. I was doing an activity which was an unauthorized activity, but my principal has ratified that activity. Then whatever is the loss, that loss will be borne by the principal and not by the agent. In a similar way, in a similar way, it is the duty of a partner to always and always act within an authority. But one fine day, if a partner does an activity beyond his authority, which means partner has done an unauthorized activity, but other partners have ratified means have approved that activity, then whatever is the loss, that loss shall be borne by the firm and not the partner. So, first point, partner is doing a work as per the authority given. There is a loss. The loss will be borne by the firm. The firm is liable. Partner did a work which was beyond his authority, but other partners have ratified it. If there is a loss, then that loss will also be borne by the firm himself, the firm itself. But whenever a partner does an unauthorized activity, other partners have not ratified it, the loss will be borne by the partner himself. JK Shah sir told me to take lectures for accounts, but I'm still taking lectures for sorry. JK Shah sir told me to take lectures for law, but I've started taking lectures for accounts, and JK Shah sir did not ratify this activity. Then whatever is the loss, then such loss shall be borne by me and not by JK Shah sir. So see friends, there are 3 points. Partner working within authority, loss, such loss will be borne by the firm. Partner going beyond his authority, but other partners have ratified it. If there is a loss, the firm is responsible. Partner has done an work against his authority. He has done an unauthorized activity. And if there is a loss, other partners have not yet ratified it, then in that case, whatever is the loss, that loss will be borne by the partner himself. Are you all sure? So every partner has got an authority, because every partner is nothing but the agent of the firm. Now, such authority which is given to a partner, such authority can either be an express authority, or such authority can even be an implied authority. Authority can either be an express authority, or authority can either be an implied authority. If the authority is given to a partner as per partnership deed, then such authorities are called as express authority. If inside the partnership deed it has been written that you are a partner, you are authorized to do this act, this act, this act, this act, this act, then all such activities are to be considered as an authority given to a partner through partnership deed, and hence they are called as express authority. What do you mean by implied authority? Implied authority is an authority given to a partner by law. It is an authority given to a partner by law. Law says you are a partner, then it is presumed that you can do following activities. No need to have a written agreement, no need to have an oral agreement. You are a partner, it is implied that you are authorized to do these activities. Then those activities are called as implied authorities. Sir, what are the implied authorities of a partner? The implied authorities of a partner says that a partner can buy goods on behalf of the firm. A partner can buy goods on behalf of the firm. A partner can even sell those goods on behalf of the firm. Being a partner, you are having an implied authority to buy the goods and sell the goods for the firm. Even if there is no authority given inside the partnership deed, still you are having an implied authority to buy goods on behalf of the firm and to sell goods on behalf of the firm, because this is the authority given to a partner by law. Law says you are a partner now, then it is implied that you can buy or sell goods on behalf of the firm. Yes, being a partner, you are having an implied authority to incur normal expenses for the firm. Whatever are the normal expenses, then yes, you can incur those normal expenses on behalf of the firm. For that thing, you don't require any express authority, because this is an authority given to you by law. Any such authority given to a partner by law is called as an implied authority. Yes, being a partner, you can borrow the money on behalf of the firm. You can borrow the money on behalf of the firm. You can even pay the debts on behalf of the firm. You are a partner now. So you are assumed to do these following activities. No need to have a written agreement for this. Being a partner, you can assume that yes, you can buy the goods for the firm, you can sell the goods for the firm, you can incur normal expenses for the firm. Yes, you can also borrow money and pay debts on account of the partnership. Yes, being a partner, it is implied that you can deal towards negotiable instruments. That is, you can draw a negotiable instrument, you can make it, you can sign it, you can endorse it, you can accept it, you can also discount it. What are negotiable instruments? Bills of exchange, promissory notes, check. These are nothing but negotiable instruments. So, being a partner, it is implied by law that you can deal with a negotiable instrument. These are the four implied authorities given to a partner. But these authorities a partner can use only in order to carry the usual business of the firm. You can use these activities, you can do these activities only to carry the business in its usual way. And you are doing this activity within the scope of the business of the firm. Means these activities are required for the business of the firm. These activities are done in the name of the firm. These activities are done in the name of the firm. It can be done in any manner, either by express manner or by implied manner, but you are going to bind the firm. And yes, it has been done by him as a partner. You are doing this activity as a capacity called as a partner. So these are the implied authorities given to a partner by law. Law says you are a partner now, so pretty obvious you can do all such activities. So law has given some powers to a partner. that you can buy the goods on behalf of the firm, you can sell the goods on behalf of the firm, you can incur normal expenses on behalf of the firm, you can borrow the money, you can pay the debts on behalf of the firm, you can also deal with negotiable instruments on behalf of the firm. However, the same law has given certain restrictions to a partner. Law says if you are a partner, then you are being restricted to not to do certain activities. Yes, these are the activities which are nothing but considered as statutory restrictions of a partner. Law says if you are a partner, then yes, you are restricted by law not to do certain activities. That is number one. You cannot submit a dispute directly for arbitration. It is better you go for court and not for arbitration. You cannot open a bank account on your own name for firm's money. So the account of the bank account should be opened in the name of the firm and not in the name of the partner. You cannot make any kind of compromise for any rights of the firm. If the firm is having a right, then in that rights you cannot have any kind of compromise. Being a partner, you cannot withdraw a case, filed on behalf of the firm. So any case which has been filed by the firm, you cannot withdraw those cases because that is a statutory restrictions imposed by a law upon a partner. Law says that you are a partner now, then such activities you cannot undertake. In fact, you cannot even admit any liability in the proceedings filed against the firm. If there is a case being filed against the firm, then in that case you cannot even admit a liability. You cannot acquire immovable property on behalf of the firm. You cannot transfer immovable property of the firm, and you cannot also enter into partnership on behalf of the firm. So friends, these are certain statutory restrictions imposed upon a partner by law. But wait, law says that if your partnership did allows, or if it is a normal trade and custom of your business, then all such activities you can 100% undertake. But in those cases there won't be any restrictions. See, these are the restrictions given by law, that being a partner you cannot do this, you cannot do this, you cannot do this, you cannot do this. But if the partnership did allows, then you can do it. Or if it is a normal trade and custom of your business, then also you can undertake all these activities. Over here, the next part, which talks about liability of a firm and its partners to a third party. Over here, whenever there is a contractual liability, then yes, a partner will be having an unlimited liability. So whatever is the contractual liability, for all those contractual liability, the firm is always and always liable. And whenever it is the liability of the firm, it is indirectly the liability of the partner himself. So partners are always and always having an unlimited liability. So firm is always liable for all the acts of the partners which are done within their authority. So whatever is the activity done within the authority of a partner, then for activities, if there is a loss, the firm is always and always liable. However, if there is a liability for wrongful acts, see, this we have already discussed. Wrongful act of a partner within his authority. Partner is working within his authority, but there is a wrongful activity, then in that case, the firm is liable. Partner has done something called as a wrongful activity, but other partners have ratified it, then also it is the liability of the firm. However, if a partner goes beyond his authority, then in that case, the partner is personally liable. This thing we have already completed in the start of this video lecture itself. Liability for misapplication of money. Whenever there is a misapplication of a money, for example, money or property is received by a partner and then misapplied by the same partner. Outsider has repaid the amount of loan which the outsider had taken. So that amount of loan is been received by the partner, but that partner have now misapplied the money. What will the outsider say? Outsider say that I have already made the repayment to your partner. The partner has made a misapplication. Then it is the fault of the partner and not me. The firm is liable. The firm is now liable to the outsider. In the books of the firm, the name of the outsider will be struck off from the list of debtors. The firm can still recover the money from the partner, but not from the outsider. Or else, money or property is received by the firm and then misapplied by any of the partners. One of the outsider who was liable to the firm has already made the payment to the firm. But later on, one of the partner has misapplied that money. Now, will the firm again demand the money from the outsider? No, the firm itself is liable. The firm can demand the money from the partner, but not from the outsider. Are you sure? So with this, friends, we have completed our one more topic, that was authority of a partner. There's a miscellaneous topic over here which talks about transfer of partner's interest, that is section number 29. Law says that partnership interest is something which is transferable in nature. Yes, the interest of a partner can be transferred easily. The partner who is going to transfer his interest is called as a transferor, and the person to whom such interest has been transferred is called as a transferee. Such transferee cannot have following three rights when the partnership business is continuing. That is, he cannot interfere with the conduct of the business, he cannot make an inquiry for the books of accounts, and he can also not inspect the books of accounts of the firm. So when the firm is continuing, then that transferee cannot interfere into the business, cannot cannot inspect the books of accounts, and he cannot also demand the books of accounts. But when the partnership firm is going for dissolution, then in order to ascertain his share, he can demand something called as the books of accounts in order to ascertain his share into the partnership property. So to receive the share of the assets of the firm to which the transferring partner was entitled, for that purpose, in order to ascertain the share, he is entitled to have the books of accounts at the time of the dissolution. So in a very simple way, when the partnership is going on, the transferee cannot make an inquiry for the books of accounts. But when the partnership firm goes for dissolution, then the transferee can make an inquiry for books of accounts in order to ascertain his share upon the property of the firm, which was already entitled to the transferring partner, that is, the partner who has already transferred his interest. The last topic over here, that is reconstitution of a firm. The last topic, reconstitution of the firm. Then we'll go for a break, and after the break, we'll have one more topic, and with that, our partnership that comes to an end, that is dissolution. So under Roman number 4, if you all remember, I had divided that Roman number 4 into 3 parts. Rights and duties of partner, done. Authority of a partner, done. The last part is about reconstitution of the firm. What do you mean by reconstitution? Reconstitution of a firm means change in the constitution. That is, change in the number of partners. Whenever there is a new partner being admitted, or whenever there is an old partner going out of the firm, new partner coming in, or any partner leaving the firm, then in that case, the firm gets reconstituted. A new partner can be admitted through a process called as admission of a partner. This is nothing but incoming of a partner. But a partner can leave the firm. A partner can leave the firm by 4 ways. That is, either by a help of retirement, or by expulsion, or by insolvency, or by death. So a new partner can be admitted through admission of a partner. A partner can leave the firm either through a mode called as retirement, or through a mode called as expulsion, or through a mode called as insolvency, or through a mode called as death of a partner. Whenever a new partner is going to get admitted, a new partner can be admitted only with the consent of all the partners, or else he can be admitted as per the provisions of partnership deed. There are 3 partners. One of the partner is required to be admitted. Then the consent of these 3 partners is required. Then only a new partner can be admitted. Or else the second way. For example, there was a partnership deed wherein it was been written that on this date, on this year, a following partner will be admitted. Then that partnership deed was already been signed by these 3 partners. Then the moment that date arises, that new person can be admitted to the firm. So a new partner can be admitted with the consent of all the partners, or he can be admitted as per the provisions of the partnership deed. Whenever a new partner has been admitted, for example, a new partner got admitted on 15th January. Now, the firm has taken a loan on 20th January. For that loan, yes, the new partner can be held liable. Any activities done before his admission, he won't be liable, but any activity done after his admission, he will be liable. Next is retirement of a partner, section number 32. A partner can be retired. A partner can retire from the firm either with the consent of all the partners. If it is a particular partnership, the particular purpose is not yet accomplished, and before that a partner wants to get retired, then he needs to take the consent of all the partners. Or else a partner can retire as per the provision of partnership deed. Inside the partnership deed, it was already been mentioned. Inside the partnership deed, it was already been mentioned that Mr. X is a partner who is a partner only for 5 years, and the moment 5 years expires, Mr. X will retire from the firm. So, retirement is possible either with the consent of all the partners, or a partner can also retire as per the provisions of partnership deed. However, there is one more way by which a partner can retire, that is, he can retire by just giving a notice. This happens only in case of partnership at will. If it is a partnership at will, then in that case, the partner can just get retired by giving a notice to the firm. Over here, whenever a partner has been retired, then in that case, it is mandatory for him to give a public notice. If a public notice is not given, then in the eyes of public, that partner is still a partner and he will be a partner liable on the grounds of holding out. So public notice is always required in case of a retirement of a partner. Next, expulsion of a partner already been done. Generally, it is a right of a partner not to be expelled. It is a right of a partner not to be expelled. But if the partnership deed allows, wherein the partner is going to be expelled with the consent of majority of the partners, wherein he's been expelled under a good faith and he's also been given an opportunity of being heard, then such expulsion is allowed. In case of an expulsion, a public notice will be given by the expelled partner or even by the firm. Next is insolvency of a partner. Whenever a partner turns out to be insolvent, whenever the court says that yes, following Mr. X is an insolvent person, then from that very moment, that Mr. X ceases to be a partner. So the moment you have been adjudicated insolvent, you cease to be a partner. Yes, even in that case, the entire firm gets dissolved. Yes, insolvency of a partner results into dissolution of the firm. But wait, if the partnership deed allows, then other partners can still continue the firm. However, partnership deed is silent, then in that case, the firm gets dissolved. Public notice is not required in case of insolvency of a partner. Last, death of a partner. Losses whenever a partner dies. Then on account of death of a partner, again, the entire firm gets dissolved. But if the partnership deed allows, then in that case, the other partners can continue the firm. If partnership deed does not allows, then sorry to say, the entire firm gets dissolved. Even in case of death of a partner, public notice is not required. Acha, whenever there is a reconstitution of the firm, then the continuing guarantee gets revoked. Section number 38 talks about revocation of a continuing guarantee. There was a partnership firm of three partners, and that partnership firm had given a continuing guarantee to a banker for an outsider. After that, there was something called as reconstitution of that firm. Then whatever was the continuing guarantee, that continuing guarantee gets revoked. Till the time guarantee was there, the firm will be held liable. But for the new transactions, there won't be any guarantee because the continuing guarantee has been revoked whenever there is a reconstitution of the firm. Last, rights of an outgoing partner. Whenever there is something called as an outgoing partner, then his accounts has to be settled. If his accounts are not settled, then that partner has a right to have share in profits as well as property of the firm. Or else he can demand 6% into the property of the firm. Anything which is over here, he can demand. Over here with this, friends, we have completed our Roman number 4, which talked about how to perform a partnership. Now, friends, we'll go for a break, and after the break, we'll be having the last topic for discussion, that is nothing but how to dissolve a partner firm. So, friends, let us go for a break. We'll meet just after 5 minutes. We'll continue our lecture. Yes, friends, welcome back to the world of business law. Before the break, we have successfully completed a topic called as what is partnership, types of partnerships and types of partners, how to form a partnership, and we also completed how to perform a partnership. Now, friends, let us go on to the last part that is how to dissolve a partnership. Whenever I talk about dissolution, it literally means it is the end of the firm, it is the end of the business, death of the firm, rather. Whenever I talk about dissolution, it is not the beginning, it's the end of the firm. Friends, dissolution can be further been divided into two parts, that is, dissolution of a partnership and dissolution of a firm. When I say dissolution of a partnership, then it is the change in the relation of partners and not the extinction of the relationship, which means the entire firm is not closed down. Only few persons have left the firm. When I say there are 10 partners and two of them have retired, then it is a dissolution of partnership wherein another 8 partners, that is, the other 8 partners, can continue the firm. So, dissolution of a partnership not necessarily closes down the entire firm. Only it is the end of relationship amongst the partners. But on the other side, when I talk about dissolution of the firm, then yes, dissolution of the firm means that the entire firm has been closed down. Yes, it is the closure of the entire firm. Over here, whenever I say dissolution of a partnership, then in that case, the relation between the few partners have come to an end. The other partners can continue the firm by going for reconstitution of the firm, wherein directly or indirectly the firm is going to get dissolved there itself. When I say dissolution of a partnership, then in that case, it is the end of a relationship between the partners. But when I say dissolution of the firm, it is the complete close down of the firm. Under dissolution of the firm, the assets are realized. But under dissolution of the partnership, the assets are being revalued. Are you getting me or not? So we are over here to understand dissolution of the firm. Whenever, friends, you talk about dissolution of the firm, whenever you talk about dissolution of the firm, then yes, friends, a firm can be dissolved. A firm can be dissolved without the court's intervention, or it can also be dissolved with the intervention of the court. So whenever you talk about dissolution of the firm can be dissolved without the intervention of the court, or else the firm can be dissolved with the intervention of the court. When I say without interventions of the court, which means the dissolution will be done even without approaching to the court, the dissolution will be done. The court is not going to interfere at the time of dissolution, wherein the situation is given under section number 40, 41, 42, and section number 43. The very first situation, by agreement, yes, just by having an agreement, just by having a mutual agreement, you can get your firm dissolved, and in that case you don't require to approach the court of law. So without the intervention of the court, the firm can get dissolved by just having an agreement. See, you partners have come together through an agreement. Then through that agreement also, you can get the firm dissolved, wherein you don't require the interventions of the court. You don't require the interference of the court, and the firm can get dissolved. The firm can also get dissolved due to a provision called as section number 41, that is compulsory dissolution. What do you mean by compulsory dissolution? Under any circumstances, the firm should be dissolved. This happens when? This happens when all the partners have been declared insolvent or all of them have died. Or else, all have become insolvent, all have become dead except one. Now that a single person cannot continue a partnership, na? So it's better you go for a compulsory dissolution. So if all or all except one, if all or all except one partner is declared insolvent or has been died, then there is a compulsory dissolution. There are 5 partners, 4 died. Now how can this one single person continue the firm? For a firm, you require minimum 2 partners. It's better you go for a compulsory dissolution. Or else, The entire business has become unlawful. The business has become unlawful business, which means when the partnership was been started, at that time it was a lawful business, but now the business has become unlawful. Then in that case, it's better you go for a compulsory dissolution. So whenever the firm is getting dissolved by an agreement, or the firm is getting by compulsory dissolution, then in that case, you don't require the intervention of the court. The firm is going to get dissolved without the court's intervention. Number three, on happening of certain contingencies. Section number 42 says, on happening of certain contingencies, that is on account of death of a partner, insolvency of a partner, or on expiry of a term. If any of these things happens, then in that case also the firm gets dissolved. And in that case, you don't require to get the interventions of the court. Without the court's intervention, the firm can get dissolved. The firm can also get dissolved by giving a notice in case of partnership at will. Already discussed in today's lecture, already discussed that whenever it is a partnership at will, any one partner gives a public notice, any one partner gives a notice, not a public notice, sorry, any one partner gives a notice of dissolving the firm, the entire firm gets dissolved. However, the other partners can continue the firm only when the partnership deed allows. If the partnership deed does not allow, sorry to say, the firm gets dissolved. So these are the four ways, these are the four methods by which a firm can get dissolved without the court's interventions. But friends, there are certain scenarios given under section number 44. There are certain scenarios given under section number 44 which says that a firm can be dissolved only with the intervention of the court. That is number one, the partner have become insane. Then we need to prove this thing at the court, and then only the firm gets dissolved. There's a permanent incapacity of a partner. Prove this matter in the court, and then only the firm gets dissolved. There's a misconduct of a partner. The partner did not behave well. There's a misconduct. Then in that case also, we need to prove this matter in the court, and then only the court will give an order for dissolution of the firm. There's a persistent breach of agreement. If these things gets proved in the court, then yes, the court can give an order for dissolution of the firm. Transfer of interest. If all the partners or any one of them have transferred their interest to another person, then in that case, the other partners can go to the court and get the firm dissolved. And when the court gives an order for dissolution, yes, the dissolution comes into picture. Or else there is a perpetual loss in business, continuous losses in business. Then in that case, any one or more partners can go to the court and demand for dissolution of the firm. Then in that case, if the court gives an order for dissolution, the firm gets dissolved. Or there can be any other just and equitable grounds. For example, the partners are not in talking terms with each other. Then in that case also, the entire firm can get dissolved with the intervention of the court, pretty obvious. So under section number 44, there are certain scenarios being put out wherein the firm can be dissolved. The firm can be dissolved only and only with the interventions of the court, otherwise not. So friends, this was my side from Partnership Act 1932. So we have completely discussed the entire provisions of Partnership Act 1932. Now friends, let us begin a new chapter that is Companies Act 2013. Companies Act 2013. Friends, this entire chapter that is Companies Act 2013 is going to have a rough weightage of 10 to 12 marks in your exams. A rough weightage of 10 to 12 marks. Whatever are the weightages I'm talking about is the weightage we have come to a conclusion through the previous attempts of CA Foundation exams. So in last four attempts, Companies Act 2013 was having an on an average weightage of 10 to 12 marks. So we believe that even for your November 20 exams, it should come for another 10 to 12 marks. So friends, let us begin our journey for Companies Act 2013. In my today's lecture, I will be just giving you introduction towards Companies Act 2013. Tomorrow, I will be completing Companies Act 2013. So let us have an introduction towards Companies Act 2013. See, friends, what is the name of the chapter? The name of the chapter is Companies Act 2013. The name of the chapter is Companies Act 2013. The very first point of discussion, what do you mean by Act? Act stands for specific rules and regulations. When I say Companies Act, which means we are going to discuss rules and regulations only towards companies. We are going to discuss rules and regulations only towards companies. And all such rules and regulations towards companies was made applicable from a year called as 2013. So I hope so you don't have any doubt towards the figures called as 2013. The major point of discussion over here is nothing but companies. Yes, friends. Yes, friends. When I talk about companies, then for a layman, company is nothing but a form of doing business. Yes, it is nothing but a form of doing business. In India, whenever a person wants to do a business, then that person can do a business either in a form of a sole proprietorship, or a person can do a business in a form of a partnership, or a person can do a business in a form of a company. So, sir, these are the only three ways under which a person can do business? No, I never said that. I said these are the three most famous forms of doing business. Apart from these three ways, there are many other ways by which you can do business. That is, you can do business in a form of a sole proprietorship, you can do a business in a form of partnership, you can do a business in a form of a company. These are the three major forms of doing business. Apart from them, you can also do a business in a form of HUF. You can do a business in a form of LLP. So there are many other ways of doing business, but these three are considered to be the most famous forms of doing business. So friends, company is nothing but one of the form of doing business. It is one of the form of doing business. Over here, the word companies is actually derived from two Latin words, that is com and panis. It is derived from two Latin words, that is com and panis. Com stands for with or together. Com stands for with or together. Whereas panis stands for meals or bread. Com stands for with or together. Panis stands for meals or bread. If you combine these two words, then the entire meaning says having meals together. Having meals together. So the original meaning of the word company stands for having meals together. But over the period of time, this thing is now being said as having businesses together. Previously, it was having meals together, but now it is having businesses together. See, friends, how does a company functions? How does a company functions? Inside a company, there are lot many of people coming together and investing huge amount of money. Such huge amount of money flows into the hands of few people. Such huge amount of money flows into the hands of few people. First of all, how does a company functions? There are lot many of people coming together. There are lot many of people coming together. When I say lot many of people coming together, those lot many of people are nothing but investors. When they are investing huge amount of money, it is nothing but capital. And when such huge amount of money flows into the hands of few people, those few people are nothing but the board of directors of the company, that is management of the company. See, inside a company, there are lakhs of people coming together, investing crores of rupees. Such crores of rupees flows into the hands of few people. With this crores of rupees, these few people are going to do business. And in that business, whenever there is a profit, that profit will be divided amongst the lakhs of investors who had contributed this money in a form of dividends. That profit will be divided amongst them in a form of a dividend. Now the question arises that when there are lot many of people coming together investing crores of rupees, and when these crores of rupees are flowing into the hands of few people, there is a chance of fraud, there is a chance of scams, there is a chance of misutilization of funds, and there is also a chance of misapplication of funds. When lot many of people are coming together investing huge amount of money, and that money is flowing into the hands of few people, then yes, there is a chance of fraud, scams, misutilization of money, or misapplication of money. All such activities shall be regulated. In order to regulate such activities, we require certain rules, and the combination of rules and regulation is nothing but law. But these rules and these regulations are specifically for a company, hence it is called as Companies Act. In India, we got Companies Act for the first time after independence in a form of Companies Act 1956. I will repeat my statement. Listen it carefully. In India, we got Companies Act for the first time after independence in a form of Companies Act 1956, wherein there were lot many of loopholes. Whenever there are loopholes inside an act, then that act has to be amended. Companies Act 1956 was been amended tremendous number of times. Year after year, there were amendments. Finally, in the year of 2012, we thought it's better to have new set of rules and regulations towards company. We should have such rules and regulations which will be more stringent as compared to the previous law. It should be rules and regulations which will be for the benefits, for the economic benefits of our country. Hence, in the year of 2012, we got Companies Bill 2012. What did we got? Companies Bill 2012. Whenever a new act is going to come into picture, before an act, it is a bill. Now, this bill has to be passed by the houses of parliament, that is Lok Sabha and Rajya Sabha. Companies Bill 2012 was passed by Lok Sabha, it was also passed by Rajya Sabha. Once it has been cleared by Lok Sabha, once it has been cleared by Rajya Sabha, then we have to present it to the President of India. President of India gave its assent. President of India gave its assent on 29th August 2013. And finally, from 30th August 2013, Companies Act 2013 was made applicable to whole of India. It was made applicable to whole of India. Yes, friends, under Companies Act 2013, there are total 470 sections. wherein these 470 sections are being divided into 29 chapters. And yes, friends, there are 7 schedules inside Companies Act 2013. This is nothing, friends, but the structure of Companies Act 2013. So, friends, Companies Act 2013 comprises of 470 sections. These 470 sections are divided into 29 chapters, and yes, there are total 7 schedules. There are total 7 schedules. Over here, friends, let us understand the very first topic, that is nothing but definition of the word called as company. Definition of the word called as company. Yes, friends, the word company is actually defined under section number 2, clause 20. It is actually defined under section number 2, clause 20. So henceforth, whenever I'm going to talk about company, whenever I'm going to ask you define a company, then the very first thing which is going to run in your mind is nothing but section number 2, clause 20. Section number 2, clause 20. The definition says a company means a company which is incorporated under the provisions of Companies Act 2013 or under any other previous law related towards company. So the definition makes it very clear that under any circumstances, the company must be a company which is incorporated in nature, that is registered in nature. Such incorporation would have been done as per Companies Act 2013, or else the company has already been incorporated under any other previous law related towards companies. Reliance Industries Limited was incorporated as per the provisions of Companies Act 1956, that is one of the previous law towards companies. Then in the eyes of law, Reliance Industries Limited till date is to be considered as a company because it has already been an incorporated company. If today I'm planning to do a business in a form of a company, then that company should be incorporated as per the provisions of Companies Act 2013. Then only my company will be considered as a company. Otherwise, in the eyes of law, it is considered as an illegal association. When the company is not registered, then in the eyes of law, it is considered as an illegal association. Generally, the liability of a member in a company is limited in nature. But if it is not a registered company, it means it is an illegal association. In that case, the liability of every member would be unlimited in nature. So, under any circumstances, the company must be an incorporated company. It must be an incorporated company. So, a company means a company which is incorporated either under the provisions of Companies Act 2013 or it is incorporated under any other previous law related towards companies. So the idea is very much clear. When you talk about a sole proprietorship, incorporation is not necessary. Registration is not necessary, rather. When you talk about partnership, registration is completely optional. You want to do it, you do it. If you don't want to do it, you don't do it. But when you do a business in a form of a company, then under any circumstances, the company must be an incorporated company. The company must be an incorporated company. Yes, friends, incorporation of a company is mandatory. For that reason, the very first characteristic we have got over here is nothing but incorporation of a company, that is registration of a company. That is registration of a company. So this is one of the characteristics of a company. Only when the company is registered, only when the company is registered, then only you can enjoy the balance characteristics towards the company. Such characteristic was not there in case of a sole proprietorship. It was also not there in case of a partnership. Whenever you want to incorporate a company, we need to approach the office of registrar of companies, that is ROC. Once the company is incorporated, then in the eyes of law, that company gets its own separate legal identity. The company gets its own separate legal existence. That is nothing but the company gets its own separate legal personality, which means in the eyes of law, the company is a different person and we all are considered to be a different person. See, Reliance Industries Limited is already an incorporated company. It is already an incorporated organization, which means in the eyes of law, Reliance Industries Limited is a different person and Mukesh Ambani is a different person. One of the investor, Mr. Kunal Shah, is a different person. So there is something called as separate legal entity. Friends, note it. In your foundation level, we are beginning with Companies Act 2013. The chapter will be continued in Inter CA and the chapter will be completed at your final CA. At your foundation level, you are just having a glimpse of Companies Act. All these things will be again there in our Inter CA with something which are additions. Along with these things, there is an addition. Therein we are going to do everything in detail. At foundation level, we have to just have a glimpse towards Companies Act. Again, I will be meeting you all. For Inter CA for Companies Act 2013. And again for final CA for Companies Act 2013. So yes, friends. The moment the company has been incorporated, that company gets its own separate legal identity. The company gets its own separate legal existence. The company gets its own separate legal personality, which means in the eyes of law, company is a different person and we are a different person, which means the company is enjoying separate legal entity. This was not there in case of sole proprietorship. It was also not there in case of partnership. In the case of partnership, in the eyes of law, the firm and the partners are one and the same. But in case of a company is a different person and we are different person. Company is created by law, hence it is an artificial person. We all are being created by nature, hence we are natural persons. Over here, there was a case study called as Solomon versus Solomon and Company. Mr. Solomon incorporated a company called as Solomon and Company. The moment the company was incorporated, in the eyes of law, Solomon and Company is a different person. Mr. Solomon is a different person. Later on, the company was going for liquidation. At the time of liquidation, the company made a preferential payment to Mr. Solomon as he was one of the secured creditor. The other creditors raised a complaint that Solomon and his company is one and the same. The judge said, no, Solomon is a different person. Solomon and a company is a different person. So this characteristic of separate legal entity arises only and only when the company is incorporated. Only and only when the company is incorporated company. So whenever I say the company has been incorporated, then in that case, the company gets its own separate legal entity. The company gets its own separate legal existence, which means the company gets its own separate legal personality. In the eyes of law, company is a different person and we all are different persons. Company is created by law. If it has been created by law, it can be destroyed only by law, which means a company enjoys perpetual succession, that is continuous living. Company never dies. The death of a member does not affect the working of a company. See, if it is a partnership, one of the partner dies, the firm gets dissolved. But not in case of a company. If one of the member dies, that does not mean the company dies. Dhirubhai Ambani died. Reliance died? No, Reliance is still working. Nah? So death of a member does not affect the working of a company. The company enjoys perpetual succession. Whatever were the shares of Dhirubhai Ambani, all those shares got transferred to the name of his legal representatives. The company never dies. Company enjoys continuous living, that is perpetual succession. Company is created by law and it can be destroyed only by law. The next characteristic says the liability of a member in a company. The liability of a member in a company is always and always limited in nature. Yes, the liability of a member in a company is always and always limited in nature. If at all I tell you who are the owners in a company, then yes, I know you will say the shareholders are the owners. You are right. But the professional way of saying is the members of the company are the owners of the company. You are right, shareholders are the owners, but the professional way of saying is the members of the company are owners of the company, and those members have got a limited liability. See, if you are doing a business in case of a sole proprietorship, you are doing a business in a form of a sole proprietorship, then in that case, the liability of a sole proprietor is always unlimited in nature. In a similar way, if you are doing a business in the form of a partnership, then in that case also the liability of each and every partner was unlimited in nature. But if the business is done in a form of a partnership, then in that case the liability of a partner is sorry. If you're doing a business in a form of a company, then in that case the liability of a member in a company is limited in nature. So that is one of the advantage of doing a business in a form of a company. You do a business in a form of sole proprietor, unlimited liability. You do a business in a form of a partnership, unlimited liability. But if you do a business in a form of a company, then in that case, the liability of the member in a company is limited. The next characteristic says about separation of ownership and management. Yes, company is owned by members, but the company is managed by the board of directors. It is the board of directors who manages the company. Owners will come together and appoint a board of director, and that board of directors will manage the company. This was not in case of partnership, and it was not there also in case of sole proprietorship. In case of sole proprietorship, the sole proprietor himself is the owner, and the sole proprietor himself manages the entire business. Similarly, in case of a partnership, the partners are the owners of the partnership firm, and the partners themselves are managing the entire business. But if you're doing a business in a form of a company, then there is a characteristic called as separation of ownership and management. The company is owned by members and the company is managed by the board of directors. Yes, the company can purchase assets in its own name. Company is an artificial person. Whatever are the activities done by a natural person, all those activities are also possible to be done by an artificial person. If a natural person can purchase assets in his own name, can Kunal Shah purchase a property in his own name? Yes. So in a similar way, even an artificial person can purchase assets in his own name. So company can purchase assets in his own name. Similarly, company can file a case against an outsider, and a case can also be filed against a company. If a company can file a case against an outsider, then yes, an outsider can also file a case against the company. So company can sue or company can also get sued. Whatever is the property of the company, that property belongs to the company. Company is the owner of that property. If you are the owner of the company, that does not make you the owner of the property of the company. In the eyes of law, owner of the property is the company. You are the owner of the company, but you are a different person. Reliance Industries Limited has owned a property of rupees 10,000 crores. Now, one fine day, I buy one share of Reliance, which means I am one of the owner of Reliance. That does not mean I have become the owner of the 10,000 crores ka property. So there is a separation of property. The property owned by the company belongs to the company. Irrespective, even if I am one of the owner of the company, I does not become the owner of the property owned by the company. Over here, the company is nothing but a voluntary association of profits. People have come together to do a business in order to generate profits, and those profits will be divided by them. Yes, a company has got a signature called as a common seal. However, it was previously told to be a mandatory one, but since 2015, it is optional in nature. The powers are given to the directors and company secretary to sign on behalf of the company. Last, the shares of a company are always and always transferable in nature. Yes, whether you talk about the shares of a public company or whether you talk about the shares of a private company, shares are always transferable, but with a very small difference. The shares of a public company are freely transferable. There are no restrictions. It can be transferred any number of times to any person. However, the shares of a private company are transferable, but with certain restrictions. It cannot be transferred to public at large. So whether you talk about the shares of a public company or whether you talk about the shares of a private company, shares of every company are transferable in nature. It can be transferred n number of times. But when you talk about shares of a public company, they are freely transferable. There is no restrictions. But when you talk about the shares of a private company, they are transferable, but with certain restrictions that it cannot be transferred to public at large. So friends, we have done a topic called as characteristics of a company. Last topic over here, that is nothing but lifting of a corporate will. Last topic over here, that is nothing but lifting of a corporate will. One of the important concept. First of all, friends, what do you mean by a corporate will? It is a kind of a covering which is separating an artificial person from natural persons. For example, this is a company. Let us term it as an artificial person. These are the group of natural persons, the members of the company, the outsiders, the creditors, the investors. You can name it anyone, anything you want to name it. So this is nothing but the group of natural persons. So over here, the artificial person is being separated from a natural person. In the eyes of law, they are two different persons, no? And they are being separated through a corporate will. They are being separated through a corporate will. So this is nothing but a corporate will. So it is the corporate will which is separating a natural person from an artificial person. Because of this corporate will, we are in a position to enjoy a characteristic called as separate legal entity. So because of this corporate will, we are enjoying a characteristic called as a separate legal entity. Now, this advantage of separate legal entity was being used as an unfair advantage. What happened? One fine day, one of the natural person, Mr. E, wanted to do a fraudulent activity. But what did Mr. E thought? Mr. E thought that if I do a fraudulent activity and later on if I get caught, then I will be held punishable. So see, this is Mr. E and this is the company. And there is something called as a corporate will between them. So what did Mr. E thought? Mr. E thought, let me do a fraud in the name of the company. And if later on I get caught, then I can easily say that it is the company who had done, it is not me who had done. And in the eyes of law, I am a different person, company is a different person, and whatever is the liability will be getting transferred into the hands of an artificial person, that is the company. So one of the natural person is trying to do a bad activity in the name of a company. If the person gets succeeded and later on if he gets caught, then it is the company who was getting punishable and not the natural person. Such activities was not justified. In order to regulate this activity, we got a concept called as lifting of a corporate will. The corporate will, which is separating a natural person from an artificial person. This corporate will be lifted. The moment it gets lifted, then in the eyes of law, natural person and artificial person will one and the same. Whatever was the loss given to an artificial person will now get transferred into the hands of the natural person himself, which is now justified. So when does a corporate will gets lifted? A corporate will gets lifted in cases of preventing fraud, in cases of to determine the true character of a company, in cases of prevention of tax evasions. So whenever a natural person is trying to do a bad activity in the name of an artificial person, then yes, in that case, the corporate will be lifted. The moment the corporate will gets lifted, separate legal entity ceases to exist. And if there is no separate legal entity, then in the eyes of law, the company and that natural person is one and the same. Whatever was the liability going into the hands of the company will now go into the hands of that natural person who had done a bad activity in the name of the artificial person. So friends, with this, we have completed the introduction towards Companies Act 2013. In my next lecture, that is tomorrow, I will be continuing with Companies Act 2013, wherein I will be discussing classification of a company, promoter and incorporation of a company, memorandum and articles of association, and yes, I'm also going to discuss the three major doctrines, that is doctrine of ultrawires, doctrine of constructive notice, and doctrine of indoor management. After completing Companies Act, in tomorrow's lecture itself, I'm going to start with Sale of Goods Act 1930. Are you all sure, friends? So, friends, meet you all tomorrow. Till that time, study well, enjoy your studies, and yes, all the best. Please, please, please have a writing practice for the subject called as law. I'm also going to have a detailed discussion about how to write answers for law, and that discussion I will be doing on my Thursday's lecture, which will be the last lecture with you all. So I will be having a detailed discussion about how to approach a question paper, time management, how to write down the answers for case study based questions, how to write down answers for theory based questions, etc. All these things I will be discussing at last. That is on my Thursday's lecture. So friends, see you. Bye bye. Take care. Thank you.